Hello guys, welcome to a Train Parrot. I cannot be happier because we had the short squeeze. I've been shouting the full week that the chances of a short squeeze were huge. If you watch my video on Paul Barron as well on Thursday, I think I repeat myself thousands of times, but we still haven't put an all-time high. So I want us to ride the way into the potential all-time high in a smooth way. Let's look at the levels of invalidation, validation. Let's connect everything with the CME gap that we are currently building over the weekend, and let's pave the way for a potential continuation to the upside. How is that going to look like to remain successful? You don't want to miss this information. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end and do not go anywhere without leaving a comment down below. Those two things, you wouldn't believe how much they are helping. The YouTube algorithm pays attention to that like nothing else and is showing my videos to new audience. New people are subscribing. In the past month, we got almost to 1,000 new followers, which is amazing. Really appreciate it. Let's get started with the daily. And as you can see, yesterday we had this amazing breakout, top of the yellow trend line. We were closely monitoring throughout this whole period from 18th of August if we were going to see a breakdown from the dotted yellow trend line or a breakout to the upside. The main focus was, is this whole move in here going to turn into a dead cat bounce? And as you can see, we ended up breaking out from the top of the triangle. Bitcoin went straight into 64.7. That is our first line of resistance. And you can see why I have placed the line there on the daily. It's because we have had multiple rejections in all this area. It's been support in April, in June. And as I was explaining, for 3 days in a row, we were going to see more volatility incoming. Now, if you think this is all the volatility that we should be expecting, no, this is just the beginning of that volatility. The actual volatility will start only once we hit one of these big liquidation areas. Of course, it could be at the top, it could be at the bottom. We are open for the price to change the longer term plan. I am bullish on Bitcoin, but as a trader, I let the price action tell me what comes next instead of my own preference. And looking at the next levels of resistance, apart from the 64.7 that we need to break above, we have the upward sloping resistance from this trend line, which is going to be located around that 67K, where we have a big liquidation as well. I'm going to show you those levels. That's also going to coincide with the point of control, where we have seen the most volume traded in this whole period, which is almost by the $67K. So take note of that number, because once we are above the point of control, from the perspective of the volume, it means that we are very bullish. If we manage to hold above that 67, then the liquidations at the top are pretty much a guarantee, and the ones here below the price start becoming a little bit more diffuse. And by the way, remember that even though there is liquidity here, a lot was reduced with this week that went to 49. There isn't that much compared to what we have here that hasn't been touched yet. We also have quite a big piece of liquidity at 47, and then we also have a 30. And yeah, on the 4-hour, we also managed to break out. We can see that there are multiple candles close outside the area of the breakout. And right now we are pointing upwards, but we have lost momentum to the upside. So I want to talk about in the video what could come next. Where are the areas for the retest and what sort of liquidity we have below the price that it's now definitely going to attract the price. CME closed at a price of 63.9. And as I was explaining yesterday on my Twitter, make sure that you're following me. My handle is Trading Parrot. My biggest wish for the weekend was that on Friday we should close as high as possible. Because if the price over the weekend comes for a retest, or even if it fails the retest and it goes as low as 60K, the CME gap form is going to leave so much liquidity in place there that is quite likely that it's going to attract the price to come from where it came from, to that 63.8. Whether after that it can hold this high without coming back down, that's a different story. But think about it as some sort of high quality insurance that you're leaving in place around this price that's gonna act like a magnet in case we saw some turmoil over the weekend. As you can see in the open interest chart, we have now pushed up to 19 billion. So we are way beyond the line of resistance on the open interest that we were talking about yesterday. We mentioned that if we fail to break above 17, we might make a second visit to the lower end to 15 billion. And whenever we make one of these trips from 17 to 15 billion, the market takes a pullback of around 12%. So if that would have happened yesterday, we would have gone to almost 53, 54K. So I actually really appreciate having seen yesterday the open interest pushing the bar higher than 17 million, kind of hinting us that it was going to continue going higher. Now that we are at the 18 billion, you can see what happens when we are at these levels coming from below. Typically, we go to the 21 billion mark in the open interest. Now what we need to be very, very careful that comes next. Once we get again to that 20 billion, assuming it happens, are we gonna get one of these 1, 2, 3, if you focus on the open interest, 4 around here, 5? Can this be the 6th time that we get to 21 billion in the open interest and we see a rejection on the price as well? Or are we just gonna cut like a hot knife through butter these levels and eventually define a new range for the open interest somewhere in here so that the price can go into discovery mode above the all-time high? We'll see. I think the chances of that happening right now have increased substantially compared to where we were on Thursday. Up until Thursday, I was just showing you the high number of buy signals that we have. You're always gonna hear me put in the bear and the bull case. There will never be a video where I'm 100% bullish or 100% bearish, because that is not my trading style. And in the past months, we have never been so close of a ratio of 1 on the Big Whale Explorer, meaning that those withdrawals are seriously increasing, making those moves from whales a lot more bullish than before. In this whole period here, the whales were very focused on depositing to dump on us. And right now, it seems like they're fearing to miss the train, which is a good thing. And day by day, they continue to accumulate. Although the pace of their accumulation, you can see the slope has reduced slightly compared to what we were seeing before the pump. So throughout this triangle, they were heavily accumulating, and we were talking about it in every single video. And during the pump, they slow down a little bit, and that's natural. And yes, as you can see, the B1 signal that we have in here around 19K, followed by the B1 signal at 25.8 that took us 185% up, and now the most recent signal, which is currently sitting at 12% in profit, showing us that once again the VIX SPY indicator has got it right. 12% is already a success. Let's hope that we get another 180% potentially. The Greed and Fear Index is again pushing higher to 56. We can see how we are exiting this area of fear right now. Let's hope that this continues and that we get once again to those 70s and 60s. I'm sure that will be the case if we start seeing a new all-time high. That could easily bring back the 80s if it happens. And today is Saturday. We're gonna finish the week tomorrow, and we are already touching the downward sloping resistance on the RSI weekly for a potential bullish breakout after this double bottom formation, after a higher low on the RSI, and we are already seeing a third bullish cross consecutive. These three guys in here, if they end up playing out together with a breakout of the RSI on the weekly, could send Bitcoin very easily to a new all-time high. The thing I'm not fully sure is if this weekend we're gonna get the breakout. What I'm speculating that we're gonna get this weekend potentially is the bullish cross of the stochastic RSI, but not necessarily the breakout of the RSI above the dotted yellow line. And the reason is because we have quite a lot liquidity that we left below the price that could become the excuse for the price to go back to the scene of the crime, to the actual breakout above the triangle, just to test that this breakout is healthy. What I don't want to see over the weekend is that we continue going into the 70s or even higher, because if we actually break this 73 over the weekend, that will be really annoying, because that will leave a massive CME gap once again. Yes, sure, CME gap is not 100% going to play out every single time, but it's got such a huge win rate that it puts me really nervous to break the new all-time high on a weekend. Unfortunate, even if it doesn't play out, feeling that stress is something that I hope we are not gonna get. And let's update on the megaphone pattern, because so far we are halfway through the yellow path. You can see that we have this moving here, we went to the 49, and now we are halfway the long line to the top. You can see how it got bought up in here, it retest. Now we are above for the first time the bull market support band. It will be beautiful if we can close above the support band by Sunday, showing that we are just ready to hit the ceiling once again and break above it potentially. The resistance at the moment, if we get to those levels, we're talking about somewhere between 69.1 to 68.9. Let's look at the healthiness of the breakout yesterday. We don't want a breakout that is lagging in terms of volume, because that can be easily undone. So let's test it. Here we have the volume oscillator, and you can see that in this big green candle of the breakout outside this triangle, we have a spike up to 7%. That is not as high volume as we have in this area here, where we typically get to 12%. And you're gonna hear some people on Twitter calling for this breakout to not be so good. But I think we are in quite a gray area here. We made it above the zero on the oscillator, and we made it above the average of the volume as well. So we should be saying, perfect, job done. But it's not as high as these movements in here. So definitely there has been a lot less volatility than before, which is just a warning, but it's not necessarily a reason to dump everything and decide to go away. You can see that every time that we have a MACD bullish breakout below the zero line, the price has made impulsive moves to the top of the range. This one took us to 73, these two in a row took us to 72K, and then in July it took us to 70. So let's hope that this one is gonna be enough to get once again to the top of the range. And you can see that the hash ribbon triggered at 70K, so we are still underwater for the hash ribbons to play out. Now the good news is hash ribbon buy signal has a long history of success. We experienced a total drawdown so far of around 28%, which is quite large compared to the previous drawdowns. Right now we are just 5% below the buy signal, and we need to make a move up 7% to break even on the signal. But typically these signals come with large moves to the upside. For example, here you have 184, in here you have 83%. If we were to make from that area where we had the buy signal an 80%, that would take us way beyond the 100K mark. Let's look at the liquidity, because this has been really amazing tool to use. People were asking me, how do I visualize these liquidations live on different time frames? I'm using tradingdifferent.com. If you look in the description, you're gonna find discounts not just for this one, but also for High Block Capital, Trading Light, Fire Charts, all of my favorite tools. Throughout the week, we were mouth-watering looking at these liquidation levels at the top, and we were thinking, how about hitting the 63 or the 65 or the 67? And what did I say? I say, if we go for them, if we break out, it's gonna be very fast and full of pain for the shorts, because they are so close to each other, and every time they hit one of these liquidation levels, the price goes back down, then they re-enable the bots and they keep pushing the price higher to squeeze all that juice from all these poor people that are thinking we're gonna go lower, let's short the bull market. Let's see why the price could go lower right now. I'm gonna do a replay. This is Friday. From the fair value gap perspective, we are due for a large move in terms of volatility. There were no fair value gaps in this area, full vacuum, no more liquidity. Price needs to chase liquidity somewhere else. I said we need to go either higher or lower. I internally had my bias towards the upside because of all the buy signals that I've been mentioning, but I'm still open for another move to the downside, which I said I am prepared to buy if we go to those levels. The price ended up breaking out to the upside thanks to Powell pretty much guaranteeing that we're going to get rate cuts very soon. All that's left to decide is the pace and the timing. And this is what happened. We went for the liquidity at the top. It was very fast, big candle, and we left fair value gaps below the price right now. So this one is gone and I need to place it to here, and we have liquidity all the way to 61.3, which conveniently is the top of this range. So a healthy move is to get to up to 61.3, grab all that liquidity, and then we need to observe, are we going even beyond that or not? That will be mildly bearish. But remember, at 63.8, we have the CME gap, which is our insurance to come back to where we close on Friday. Now, what's the difference between the two scenarios of just going to 61.3 and then coming back to 63.8 to close the gap versus going way beyond 61.3 and then closing the gap? If we go way beyond and we re-enter that range, we are kind of spoiling the party that we are currently having. Yes, we can go back to 63.8 to close the gap later, but that way of going back to that level is definitely less bullish than just hitting up to 61.3 and then continuing our trajectory to the top of the range. It's not good to revisit a previous range if we are in progress on an explosive move. We can still go below 61.3 and we can still go to an all-time high after that. I'm just talking about how we affect the probabilities of hitting that all-time high ultimately. And where is the liquidity below the price right now? We have the largest level at 63.3, and if we go up until 61.6, we will capture 2.65 billion in liquidations of longs. To the upside, there is nothing that significant in the past 30 days. Here we have fire charts, and I want to show you again another confirmation that we are due for a small reversal during the weekend. We have this selling pressure located at 65K, right above the price, with a big vacuum below it, and the support starts from around 60K. So expect a little bit of volatility right here. This selling wall is around 47 million, which is around the same that we have here at 62K. You can see that the purple wells have been buying. There's still not any significant selling pressure, meaning that there is conviction up until now. When we look at Binance order book, I still see all these orders at 47 to 46, even if we broke out. So on that area, nothing has changed. But with this particular candle, the guys that gave up are the 40K to 39K. Seems that they lost the hope to be able to buy at such low prices. You can see that even today we still have funding rates in the negative. This means that even though we went to 65, those shorts haven't given up to try to push the price lower. And in my opinion, that is a great thing. In bull markets, when you see the most explosive moves to the upside is when there is something fundamentally changing, like for example, the monetary policy being confirmed to shift. Whereas all the shorts are saying, no, I'm convinced we are going lower, and they start shorting the price. And that makes it a lot more attractive for market maker to punish all this imbalance of so many shorts right now. They might get away with pushing from 65 over the weekend lower because there is liquidity below. But once that liquidity is gone, if these funding rates continue being so extremely into the red, they're exposing a lot. You can see all the liquidity that we have on high block capital up to 70K. That's clearly in the 1 month chart. We can also see it on the 6 month chart. above 70K, started from 73 to 76. And on the yearly is also there. There is a big price for the market maker to take from here now that you got the backup of the monetary policies changing as well. And at the moment, the longs are the ones in the delta that are more exposed to liquidation. So once again, this amount of cumulative delta is enough to, at the very least, go to the scene of the crime at that 61, 61.5 and take that liquidity as we've been discussing in the rest of the video. And if you watch tomorrow's video, I'm gonna give you an update on the breakouts that we are currently seeing. And I'm just gonna leave this picture here so you get excited about watching that. I can't wait to share those amazing news. And speaking about good news, I'm really proud about this. Thanks to you guys for joining the channel. Thanks to all the new people watching the videos and joining on YouTube, on Twitter. This is allowing us, guys, to take another step towards eventually making all the value in this channel for free. We haven't changed the prices of these subscriptions in years because the value offer in these subscriptions is used in a vast proportion to maintain the services, to pay developers, and a lot of extra costs. And since retail is not here, it has become a real challenge to be able to drop the prices and at the same time being able to pay for all those costs. But thanks to all the people supporting the channel and opening accounts with the different links in the description, we are starting to become able to drop the prices. The ultimate goal is to make everything for free. I hope one day I can give you everything for free. Right now, we are reducing the prices 25% on the Observer, 33% on the VIP, and 33% on the VIP that includes a call with me once a month. And if that wasn't enough, if you open an account with Bybit using the referral link down below and you fulfill these requirements, you can sign up on my website and just claim the subscriptions already for free. I'm leaving you instructions on how to transfer your referral to my referral and how to use a card so you can trade on Bybit from anywhere in the world. And don't worry about the trading volume. It's very easy to get to these levels of volume, even though it looks like a lot. For example, if you deposit 1,000 and you take 10 trades, you already made 10K in trading volume and you already can claim Observer for free. If you use leverage, even easier. Maybe in half a day, you already have the trading volume that's required to get some of these subscriptions for free. We are constantly adding new things. Join our Discord server to stay in the loop. For example, yesterday we did a massive update to pair selection. Number one, we increased the allowances of number of bots to all the different tiers. Now Observer gets updates on the pairs every 4 hours instead of once per day. And we have given the full allowance to VIP since we have removed the gold tier. So VIP now gets everything. Our developers as well have been working hard to provide support for all quote currencies, meaning that you can run a bot against BTC or against Ethereum and still get selections of pairs automatically on 3 commas, Weak Hunter, Ganium, and Already. That's just a single example, but there's plenty more. Guys, thanks so much for watching the video, and remember tomorrow to tune in for the video about the VAX. You don't want to miss that before Monday. Believe me. Bye.